Hi everyone, welcome to my YouTube channel. My name is Tabitha and today we are going to talk about capital gain investing. So this year I started this program of investing every month for capital gain and for passive income. So for capital gain, so I buy shares low and then sell them high. Or sometimes I just buy them at any point and then dollar cost average until I get the capital gain that I desire to take. So this is a continuous process and I have like some strategies that I apply that help me not to lose money and to lock in capital gain. So this month we are going to do capital gain investing for October and we will mix 4 point. So let's see. I said before today we are going to do the capital gain investing for October 2025. So we have about $100 in our account. So and this $100 we are going to use it to buy more shares. So because it's Canadian and I'm going to buy like a Canadian company, this amount is in Canadian, so I will buy the ETF from the Canada side. So let's see the position that we have already. So we have Home Depot. So Home Depot has dropped by 176. And because I'm dollar cost averaging and I'm holding it for the long term, so this one doesn't really bother me. Instead, if I have more money now in US dollar, I will buy more of Home Depot because now it's present the opportunity of buying more to dollar cost average. So this one also has also dropped, and in the meantime, I don't have any US dollars amount, so I'm not going to worry about this one today. So this one is also US ETF, so I'm not going to um to pick this one. So today I'm just going to buy an ETF that is Canadian. This one is for the exchange rate, so I just send some money in to exchange them to US dollars so I can buy maybe Nvidia or all those stuff, right? So today we're just going to do, let's see some of the ETF that I normally buy. So if I click on VRE, so VRE now is 32. The previous high is 36. So if I buy this one, I have a potential of making 3% on my purchase as a capital gain because we are buying low and selling high. So this is the highest it went in the 52 weeks height. And then this was the lowest it went, which was 27. So if someone had bought it here at 27, they will have made a big profit of about about 5%, right? So they'll have make 5% moving from here to here. So let's see another like a ETF that I normally buy, which are Canadians. So let's see XEI. So XEI is actually close to the previous height. So at this point, I don't see the point of you buying if you really want the capital gain sooner. Or if you want a dollar cost average, and then it doesn't really matter the time that you buy it or the price that you buy it, because you will still try to compound as long as you invest your money. But here, maybe you want your capital gain next week, in 2 weeks' time, or maybe in a month. So you really need a stock that will give you that buffer of a percentage that you can target. So this one is just close to it high. So we leave that one. Let's go for VDY. So if you look at VDY here, which is a Vanguard one, so it's also close to its height. The VDY has really grown this year. Mostly it ranged between 42, 43, and this one, but now they had really grown to $59, right? Which is a huge jump. Yeah. So mostly it's here, like 43 and 99 cents. but it went to 60. So people who had bought it here now made profit, but mostly people hold it for capital gain, so they don't sell it. But if you just want to also make profit from the capital gain side, and then you also free to buy it. If I want to dollar cost average, and then I will buy it at any point, like today, 59. But my money is not enough to buy like more shares of this one. So let's continue looking. So another one is mostly XEI. So let me see XEI. The XEI is the lowest one, and it's already reached almost to its height. So should we buy it or not buy it? We only have like a chances of getting 1%. Or if we keep buying it, maybe we can dollar cost average and make profit. So maybe, in my opinion now, it's the VREs that really win our things today. So the VRE will give us at least 3%. 3% chances of getting a capital gain of 3%. So if you also look at this one, if you look at the chart, it's not bad. It's not really, it's not a stagnant stock. So it normally move, right? So it moves. So it's good for capital gain. So at some point it was highly on the 10th of November, it was 33. So it went here. So it's something that can actually move. So on the 17th is now here. It's now at this point, slower now, right? So who knows? Who knows where it will go next? So it's really actually move. It does not really stagnate that much. So you can make some capital gain investing in the VRE. So I normally don't use it for capital for passive income dividend, because the dividend is really very low, right? It's very low. So once you decide what type of stock that you want to buy, so you can now see the account that you're putting it inside, which is TFSA. The reason why you put your capital gain account in this is that the gain that you make on this account is not taxed. So it's just your free money as long as you don't go against some rules, because TFSA is not for like active investing. So you cannot make huge return in a day in this account, because if you do that, it's like you're evading tax. You're avoiding to pay taxes, because anything that you gain in this account is not tax. So if you turn into trader and you make huge profit every day, and then use other account like cash account and marginal account, so you can report your income to CRA and you are not going to go into trouble. But if you're making capital gain, small capital gain here and there, and then it's no problem, you can use this account for investing. Yes. So for me, I normally buy ETFs and individual stocks. So those are the choice that I make. So if you don't have your money inside your account, you can move your money and choose the debit option, which is instantly refund your account. So another thing is the price point, because we are investing for the long term and we are doing the dollar cost average. We have to choose choose stocks that are stable, stock that we know they will be here in 200 years time, or maybe they are that stable that you're not going to lose your money overnight. So we don't need to put a stop loss, because we are going to take advantage of a price drop as an opportunity and we buy more. In addition to, we have to also diversified. You cannot put everything in one ETFs or in one individual stocks, because even if we really do an analysis and we make up our mind that this company is really good and is going to stay strong for all these years, you never know. Maybe other factors that we don't really study or we don't really analyze might contribute into a company going bankrupt, and you might lose part of your portfolio. But if you put everything in one, and then you lose everything like that. And mostly under any circumstances, all st all companies or all ETFs are not affected at the same time. So if anything is hit, the other ones, you can make the opportunity of growing it back. So the strategy is long term and dollar cost average. So now let's go ahead and buy VRE for our account. Calculation, and based on the amount that we have in our account, we are only going to buy 3 shares of VRE. So VRE is ETF, it's a Canadian ETF, it's a Vanguard Investment Canadians Inc., which cap the REIT index. So it's mostly on the real estate ETF. So we are going to just do that, and we choose the market price, because we want to execute it today and today. So that's it. So let's review the stock order confirmation page. So we are buying 3 shares of VRE at $32.06, and it's going to cost us 96 and 18 cents. Okay. And there's no commission because I'm a member of Questrade Plus, and I pay $11 a month, and I don't have to pay commission whenever I'm buying ETFs and other individual stocks. So, and then the balance is $10.85. So let's go ahead and send it. So if you come back to our portfolio for capital gain account, so we have now a position of VRE.TO, and we have only 3 shares. So what I'm going to do is, like, I'm not going to just sell it whenever I get like a small capital gain. So I will just continue investing until I will have a capital gain of at least 500 or maybe $1,000 from each of these this thing that I'm going to invest in. So let's say, for example, you have capital gain of 500, 500, 500, and then it will already increase your account, and you will be able to achieve whatever you want to do with this account. Before, I wanted to use it for to buy a car, but now the plan has changed. So I'm going to use this one to save for the next, for my business house that I want to use for real estate. So let's see if we are going to achieve this goal together. And thank you for watching, and I will see you next time. Don't forget to subscribe and comment for future videos. And thank